Welcome, and thanks for joining us. This is the fifth of 7 events of our series, Envisioning a Livable Future, which we've organized to mark the 10th anniversary of Pope Francis's groundbreaking encyclical Laudato Si on care for our common home. I'm Rusty. This is our first event since the spring, and also our first event since the death of Pope Francis. May his memory be a blessing. My name is Bernard Prusak, and I hold the Raymond and Eleanor Smiley Chair in Business Ethics at John Carroll University, which is a Jesuit institution in the greater Cleveland area in the United States. John Carroll is hosting this series in collaboration with the Hank Center at Loyola University, Chicago, and I thank Michael Murphys for his partnership. I also want to thank my principal collaborator in organizing this series, Dr. Catherine Feely, whom you see there. Our topic this evening is After Greenwashing, a panel discussion on finance and investment. It's a follow-up event in some ways to our excellent discussion in March on the political economy of climate change. And if you haven't seen that recording, you might want to check it out. It's available on our webpage. So take a look at that perhaps after this event. We have 4 panelists this evening, and just like in March, a facilitator, Felipe Witschker, who will introduce the panelists himself and frame the discussion to come. To introduce Felipe briefly, he is the co-founder and executive director of the Francesco Collaborative, which seeks to unleash new leadership from faith-based impact investors to tackle social and environmental challenges. Building on 2 decades of experience as a consultant and investor, Felipe also now leads Livable Future Impact, which connects investors with funds and managers aligned with their purposes and values. Felipe, over to you.
Thanks so much, Bernard. So good to be here, everybody. Just want to really reiterate again, at our last discussion, like Bernard mentioned, on the political economy of climate change, we heard from Katie and Brian Boland, investors that have been doing really pioneering work to more deeply embody Catholic social teaching values in their investing. And in that discussion, we kind of got to what are these impact investments that we can invest in? And that's kind of where today's discussion picks up. So before we kind of jump in, just want to offer a brief disclaimer. This is for informational purposes only and educational purposes. We're not making direct investment advice. You should consult your own advisors for things like that.
We couldn't see your slide there, by the way, Felipe. I don't know if you want to show it.
Try that again. I'll pull it up. I'll put it in the chat here, the disclaimer. So what is greenwashing? Greenwashing is when a fund or a company makes a claim of being sustainable or socially responsible, but underneath it, the business practices remain the same. It's kind of that marketing layer that hides business as usual, performative sustainability rather than authentic change. We want to kind of say maybe that ownership or governance or the actual underneath part is how you might be able to make that distinction. And I think what you're going to hear from our speakers today is some of that. Finance is kind of complicated in how we change it. There's 4 structural barriers I want to kind of name as we tee things up. And part of why I think greenwashing is so pervasive is because our financial system is kind of structured to produce it. So here's some of the key barriers. Public markets or kind of shareholder primacy makes the capital asset owner kind of above all else, right? So everything else is subordinate position. In the stock market, all those companies are generally governed by that shareholder value above all else. So that pressure makes it incredibly difficult for public companies to prioritize other things. And public companies are what make up our portfolios, the dominant investment options we have today. So if you do kind of make something that's other than kind of capital supremacy, you get risk being punished by the markets often. So it's rare to find this mission-driven company in public markets. A second dynamic and structural problem here is the Employee Retirement Investment Security Act, ERISA, which kind of really pushed fiduciary duty to be narrowly defined in financial terms only. And that's a lot of the prudence standard means that retirement plan managers have to focus almost exclusively on what the dominant trends are in the market. And in practice, that makes it quite complicated. And we're going to hear from a couple examples today of trying to push social and ecological values to be centered. So that's why most retirement plans default into funds that track the market, regardless of whether those companies are harming creation or exploiting workers. The third structural barrier I'm going to name is just the limited options that we often have in our 401k or IRAs, and yet they present this enormous opportunity too. And so we're going to see, I think, who's pushing the envelope, who's leading in this. And I think we're going to hear from Just Futures about that. And finally, the fourth one is the inaccessibility of private markets. Some of the most authentic and transformative impact funds exist in these private market domains. But by law, those are generally restricted to accredited investors, meaning only wealthy ones can access them. There's some exemptions and exceptions, and we'll hear about one of those funds, Quechua Impact Fund, today. And that leaves the vast majority of individuals locked out of investing from their conventional places where their retirement's held. So shifting to self-directed IRAs or other tools, that's what allows us to really embody Laudato Si and Catholic social teaching at a deeper level. So after 4 years of my doing this at the Francesco Collaborative, we were inspired by Pope Francis. This encyclical really got us going 4 years ago. I think one thing I've learned is I come to see ownership and governance as a strong proxy for distinguishing between what greenwashing is and what's real transformative impact. Who owns the business? Who governs it? Who has power at the table? And so if it's owned and governed by traditional financial institutions, no matter what the marketing says, it'll probably serve their interests first. So how do we hear the cry of the poor or the cry of the earth? Look for where ownership and governance is structured differently. And there are democratic, movement-led, movement-owned entities out there. And that's part of what's exciting to me, is that this ecosystem is flourishing and there's more and more examples than ever. So you're going to hear about 4 examples today, and hopefully gateways to many, many more examples in your communities and throughout. So with that framing, let me introduce our panelists. We have Mika here, the CEO of Just Futures, a movement-owned trust and a 401k provider. She leads the firm's mission to deliver investment solutions rooted in social justice values. I'm proud that Francesco Collaborative is one of their early clients, continues to be. Mika brings extensive experience in nonprofit management, technical systems design, and training delivery. Then we'll hear from Jonathan Welly, who's lead organizer with Cleveland Owns, a nonprofit solidarity economy incubator in Cleveland that starts cooperative business, leads campaigns for community control of resources. His experience goes back 15 years with Solidarity Economy as a small business development advisor with the Peace Corps in the Dominican Republic and in Peru. And after getting a master's in public policy, Jonathan worked with a dozen different public and private sector clients as a consultant with McKinsey & Company, where he saw how powerful institutions use ownership to concentrate and centralize power. Then we'll hear from Yichen Fang. She's Director of Investments at Acumen America, where she invests and manages a portfolio of companies tackling poverty and inequality across the US. She also serves as a board director at Quechua Impact Fund, the Head Start Network, and is on the investment committee of the SK2 Fund. Yichen was previously a principal and co-founder at Lumos Capital Group, focusing on growth stage education technology and future of work investments. And finally, we'll hear from Hendrix Berry. She's the director of financial planning at Oberon Capital Advisors, which is a worker-owned cooperative conglomerate. Hendrix supports advisors in working primarily with young wealth inheritors to develop sound financial plans and investment strategies aligned with the solidarity economy movement. Hendrix currently serves as the board treasurer of the New Economy Coalition and is one of the founding members of Radical Planners and the Boston Ujima Project. So for the structure for our time together, we'll have each give a short presentation, and then we'll have 3 or 4 minutes for discussion. And that'll take us to about 50 minutes after the start here. And at that point, we'll turn to a broader question and answer forum with all of you. We ask you to please put your questions in the Q&A box. And both Bernard, Sister Catherine, and I will do our best to introduce our questions into the mix. So with that, I'll turn it to you, Mika.
Thanks so much, Felipe. So by way of introduction for who Just Futures is as a firm, we're a people of color owned and run investment advisory firm that offers a few different services. We manage organizational assets for nonprofits and foundations. We do some back office support for private impact funds, but the focus of our conversation here today is our primary business, which is that we are a 401k and 403b retirement plan provider. So what does that mean? We help employers, mostly nonprofits, but not exclusively, offer retirement benefits to their staff in a way that is in better alignment with social justice values. We screen the investments that go into the plan, and we support organizing through our ownership model, which I'll get into a little bit more detail on. So there are 2 main elements that drive our work that I want to focus on for this section. The first is why retirement. And Felipe touched on this, right? For most people who are not independently wealthy, retirement accounts are the main, if not the only way that they'll invest over their lifetime. And that has many implications, including for the astronomical racial and gender wealth gaps in this country. But more central to this conversation, when we think about a shift to a new kind of economy, it's critical that there be opportunities for ordinary people, right? Folks who don't have inherited wealth to quite literally invest in it. If you have a subset of wealthy people who are investing in co-ops and renewable energy and land trusts, obviously that's great, and we support that. But that alone is not going to be enough to get us there if most everyday people still depend on an extractive financial system for their own long-term financial security. So it's really important to us that we create pathways to make investing in this new economy available to anyone. And for many people, that may only be realistic through their retirement savings. The second element I want to touch on is how do we shift power alongside our investments? So the founders of Just Futures are longtime movement organizers who were interested in the idea of a movement controlled and owned financial intermediary. And let me define financial intermediary, right? A lot of focus is often placed on the investors, the people who hold the capital, and the investees, the folks who are ultimately receiving that investment. But there's this whole industry of intermediaries, banks, investment advisors, fund managers, right, and so on, who frankly often extract insane profits to facilitate these transactions. So, to give an example, between 2000 and 2021, the finance sector accounted for about 7 to 8% of GDP, but 25 to 30% of all corporate profits. So not only are they enriching themselves in this work, but they wield enormous power by determining where investments get directed. The Just Futures posit then is, what if there was a financial intermediary that was directly accountable to people of color-led social movement groups and could redirect profits to those groups? So we've been able to achieve that through a unique ownership model where right now 30%, but eventually the majority ownership of our firm will belong to a group of movement organizations through a trust. And those groups are Center for Economic Democracy, Chisholm Legacy Project, National Black Food and Justice Alliance, NDN Fund, and Right to the City Alliance. If you aren't familiar with those organizations, they work on affordable housing, racial justice, economic, climate, and food justice, resourcing Indigenous communities. And through this ownership model, these groups have both governance rights. So they elect representatives to our board of directors and investment committee, meaning they have real power over how we operate as a company. And they also have economic rights. So as we're profitable and issue dividends, they'll receive money outside of the traditional philanthropic relationships to support their work. So the work that we're doing at Just Futures is still subject to the barriers that Felipe mentioned, right? But where I think some people's reaction has been, okay, in that case, I'm going to completely pull out of public markets and the system that requires prioritizing returns, which of course is a totally valid response, but it's not possible for a lot of people. What we want to do is act as a bridge and say, first of all, at the very least, can we make it easier for more people to invest in a more aligned way without having to do all the research and work and figuring out how to do that on their own? And then, our sort of more ambitious goal is, how can we leverage the collective power of people who are in progressive movements investing together to, let's say, support campaigns against movement corporate targets, or to actually make those private market investments more easily accessible. So we're still relatively new. We've been working with clients for 2 years now, and we'll need significantly more scale to accomplish this, but we're working on it. And happy to answer questions that come up about the specifics. But for now, I'll pause it there and pass it back to Felipe.
Yeah, thanks so much, Mika. I think was interesting to me was to survey the landscape of 401k providers for organizations, or 403b, and it's concentrated in the hands of a relatively small number of firms, but there are about 5 other companies that are trying to focus on climate or other environmental questions. I think one of the most interesting things about what I found Just Futures distinguished themselves was kind of that brokerage window, that self option that you can eventually be able to choose other investments. Could you just briefly talk about that more ambitious part on the horizon where people could actually choose private investments that are these more deeply embodied ones?
Yeah, absolutely. So, yeah, our North Star from the beginning, even though we knew it wasn't going to be possible at the outset, was to make it more possible for people to use their retirement accounts to invest in private, what we would call regenerative economy funds. And we know that there are significant barriers, which is why it hasn't been easy to do so far, right? From a sort of legal, operational perspective, as well as, like you touched on before, are those funds in a position to accept these small dollar investments? For a lot of private funds, it makes sense for their model to focus on bigger investors. So we've been undertaking some research already, and we know it's going to be a few more years still before this is available, but we're confident that we will reach a scale where we can use. So it's interesting. There have been some providers now who are leveraging technology to allow retirement investors to, let's say, invest in cryptocurrencies or other types of private assets. And that specific asset class is not one that we're interested in, but we can potentially use the sort of regulatory framework and technical capacity that they've created to instead think about creating either, like you mentioned, a self-directed brokerage window that would allow folks to access these private funds through our retirement platform. We're also looking at a community investment trust model. So we're exploring a few different ways. There are, again, sort of a lot of regulatory barriers, and don't want to get overly technical here, but hopefully that provides some more detail.
Mika, can I jump in? And I wonder if any of the other panelists want to, but I actually want to ask a question already from the Q&A. And maybe I could say a little bit about this. And everybody watching, put your questions in the Q&A. We'll do some during the presentations, and then we'll hold some to the end. Anyway, so how do we know the extent to which our employer-established retirement funds, for example, TIAA, participate in social and ecologically goal-directed investment?
Yeah, it's a great question. Because there is so much greenwashing, it can be difficult to assess, okay, if this fund has sustainable in the name or social impact in the name, what does that actually translate to? There are a number of tools out there. The best public one is through As You Sow. They have a website called Invest Your Values, and I can pull up the link and put it in the chat after this, where you can put in individual fund names, or actually if you work for a bigger name corporation, they actually have the retirement funds more readily available. And they have a number of categories that they use to assess around climate, environment, prison industrial complex, weapons, tobacco. We also offer, as part of our service, that folks have an existing retirement plan and are thinking about converting. We'll use a software that we use that's proprietary called Your Stake, that has a sort of broader array of issue areas, including labor rights, LGBTQIA, racial justice, so on and so forth. And we'll give you that side-by-side comparison. One thing that's really important to us is to be transparent in this process. And we are very clear that even though we have this really rigorous screening process and this accountability, we are still subject to those regulations that Felipe mentioned. And so even our plan is not this sort of unicorn 100% values aligned solution. It doesn't exist in the system that we're operating in. And it's important, for us to be sort of realistic about that.
Thanks.
Maybe I'll just kind of add 2 points there. So just to kind of highlight, given the constraints of 401ks and retirement funds like TIA or even Just Futures operates in, because of ERISA, it's quite complicated to find deeply embedded. So you're going to find some incremental changes, negative screening, positive weighting towards more environmentally oriented companies, assessing the risk factors connected to environment questions. But to get the deeply embodied Catholic social teaching principles, embodied investments, you're going to have to look beyond your normal retirement accounts. And that's really the only way today, or converting your current retirement to a self-directed IRA, which allows you to have the much broader set of options. So just wanted to clarify that. I think we'll move it over to Jonathan, who's done a lot of incredible work on his own portfolio and can tell more of his own story as well as the great work. Jonathan, over to you.
Thanks, Felipe. Yeah, let me zoom in on my story. Good to be with y'all this evening. And I'd like to start my story by describing a moment when I felt a lot of anger in relationship to my relationship with my retirement money. I had just gotten a letter from my employer about my retirement savings. At the time, I was working for McKinsey, so I was a handmaiden of capital. And I got this letter from the employer that described where my retirement savings were invested, which was in McKinsey's secret employer-run investment fund that has hundreds of billions of dollars of their wealthy workers. And I had asked, please tell me where this money is invested. That seemed like a reasonable thing to ask. And I got this letter back. And I remember this moment when I opened the letter, and they basically, at the end of this letter, they said, we were not going to tell you. This is a secret sauce. And even though this is, in fact, your money, you do not have the right to know where this money is invested. So I was angry because I felt entitled to know where my money was. And also because I felt increasingly concerned that, sure enough, probably that money is not in places that I would want it to be if I can't prove otherwise. And I just want to spend a moment on this feeling, this anger that I had, because for so many of us, that is not the only emotion that I've experienced, but it might be an emotion that has come across your journey in your relationship with money. Some of the other ways that I've experienced emotions around money include, a sense of feeling inadequate, a sense of feeling at times proud of my money situation or my relationship with money, at times disgusted, sometimes entitled. And I actually want to see if y'all would be willing to share. So if we can queue up the chat in just a second for everyone who's a panelist or an attendee, if you'd be willing to share a word or two about a recent emotion that you have felt about your relationship with money, go ahead and put it in the chat, but don't press enter. We're going to press enter together in a few minutes. And I think Bernard is helping us change the chat settings so we can do this. So an emotion or two that you felt about your relationship with money recently, type it in the chat, but don't press enter. We'll do that together.
And I think the chat settings will work. Fingers crossed.
Fingers crossed. We'll try it. Okay, so type it in, but don't press enter. We're going to press enter together. Let's go ahead and press enter. Take your last few seconds to type that word or phrase in. Let's press enter together on 3. So 1, 2, 3. Okay, I see y'all. Okay, great. This is amazing. So we've got overwhelmed, frustrated, hopeless, unsure, anxious, confused, vague, worship, avoidant, fight or flight, anxiety, thankful, surprise. Thank y'all for sharing this. That really, in a snapshot, shows the breadth and really the depth of experience that so many of us have with our relationship with money. And I just want to hold this for a second, because one of the things I believe is that capitalism and white supremacy tell us to ignore this. They tell us to focus on productivity. They tell us to focus on efficiency at all costs. And so often that leaves very little space. And in fact, we are disincentivized to understand how we feel about this and to share how we feel about it. So thank you, everyone who typed something in the chat, for showing a little bit of courage and beginning to push back against capitalism and actually spend a little bit of time talking about the emotional side of it. And this, I'll say, is especially true for white managerial class folks, especially men like myself. So I know some of you are out there, so shout out to all y'all, and thanks for participating in this. I also want to thank Resource Generation for even popularizing this idea of a money story, which I think is a great group that does good work helping folks to elucidate their relationship and the emotions around their relationship with money. So, okay, back to the story I'm telling you. At that point, I had what felt like a substantial amount of money. It is a substantial amount of money, maybe $200,000 in this secret McKinsey retirement account, which in my world was just enough money to start feeling bad about. And I realized I want to take accountability for where that money is. So sure enough, took the money out of the McKinsey secret account and I put it into something that felt better aligned with my values, which was like a robo-advisor. Betterment is one of these robo-advisors that I use. They had a socially responsible investment fund. That sounded great. I want to go there. And, I felt better. I felt this a little less angry, a little bit more in control, a little bit more aligned with the things that I cared about. I wasn't invested, as far as I knew, I wasn't invested in alcohol, tobacco, the military industrial complex, fossil fuels. Then I did a little more research and learned that that wasn't the case, that in Betterment, in fact, even in this socially responsible investment portfolio, my money was still in quite a few of those things, and that I really wasn't in line with what I actually wanted to put my money towards. So then I did another version and took it out of Betterment and kind of made my own optimized ESG portfolios, which was a lot of work, but all kind of on Vanguard stuff. And it felt like I was, again, a little bit better. I could feel myself getting a little bit closer to that values alignment. But then a couple things happened. It was around this time that I started reading Michael Schumann, who's an author who's written about some of this stuff. I joined Next Egg, which is an online community for folks on this journey. Most importantly, I left McKinsey and started Cleveland Owns, which is here in my hometown of Cleveland, Ohio. We're a nonprofit that is building alternatives to capitalism. We're starting cooperative businesses, worker-owned co-ops, community-owned co-ops around solar, a food store, a purchasing co-op. We're now starting to support folks who are building resident-owned cooperative housing. And we're pretty early on that journey of trying to figure out how to do that. But certainly that inspired me to think even more deeply about how could the money that I have in retirement go to support initiatives like that in my hometown and abroad. And so continue to take several steps further down this path. In 2020, decided to give away around 10% of my wealth, redistribute that towards causes that felt important to me, that were focused on power building. That felt cathartic. It also felt a little scary to give away a substantial bit of money that felt substantial to me. And that's wild because it was only a few years prior to that. I didn't make this part clear, but I had basically zero net assets. And so in a short amount of time, built up these savings. Still felt scary to give some of those things away. But my retirement journey continued. Just to quickly close here, moved to a self-directed IRA, put some money into a local co-op, Rust Belt Riders, through that self-directed IRA, put money into the Quechua Impact Fund, which is a group that I really respect that we're going to hear more from later. Move some money to Calvert. I'm not endorsing these things, but I am saying these are some of the ways that I was able to find to even continue this journey, starting from a secret hedge fund to giving my sister a loan to put solar panels on her roof. Like those all felt much more aligned with how to use the resources that I had remaining. And I think here's a really quick tool that I use to guide that decision-making. Sure, there's numbers on a page. I started to apply to those numbers on a page what I'm going to call a moral discount rate. Like the value that those numbers represent to me are only as valid as the proportion they're aligned with my moral compass. And the investments that may have had a lot of numbers in them, but were not aligned, like I could actually feel myself less excited, less compelled by those investments. So I'm describing this new term as a moral discount rate, which actually deflates the value of something or could inflate the value of an investment based on to what extent it actually fits with the things that I need. I'm so thankful for the communities that have supported me through this process. Sabbath Economics is a great set of resources and community that I just want to shout out. Even my parents, who I think made their own decisions to avoid a consumerist lifestyle, I feel grateful for that. And today I'm in Cleveland, surrounded by folks who are working hard to build an economic system beyond capitalism. We call that the solidarity economy. Folks building co-ops alongside me. That has felt like a really important support network as I've gone through this journey and continue to go through this journey.
Jonathan, we met on that journey where I was also building a cooperative and you were building Cleveland Owns, and you've really done a remarkable job of engaging so many stakeholders. You've done solar, you've done local economic development. Give us a taste of what Cleveland Owns is involved in today.
Yeah, thanks. Yeah, we've got a mix of projects that are, when you stitch them together, trying to build a little bit of a vision for what it looks like to move past capitalism. So we have an incubator where we start worker co-ops. Right now, there are 26 people in Cleveland starting 7 different worker-owned businesses. There's a plumbing co-op, environmental construction co-op, cafe, a whole bunch of different small business ideas. Separately, we have 100 member owners in the Cleveland Solar Co-op. We're working to build Ohio's first community-owned solar array, put that on the roof of a nonprofit, use net metering to pay back the member owners who put the money in up front. We are starting Power Up, which is the community purchasing alliance of Ohio. We've worked with 55 different local nonprofits to sign 110 contracts for the things they need for facilities management, working on a food co-op, and we're just getting into housing co-op. That's a really exciting area. Talk about solving the need for affordable housing. When residents can own multifamily housing together, they can live at cost and keep that housing perpetually affordable. It's happening in other cities. We want to make sure it happens here in Cleveland. Those are some examples.
Jonathan, one thing that you mentioned was, loans to people in your community. One thing I've been impressed by, I'm part of a very local common good fund here at my parish in Durham, and we pool money and we give loans to a couple farmers. That's how I get my start was in the slow money movement. Can you just share a little bit about some of the smaller businesses or enterprises you've been connected to? You mentioned Rust Belt Riders, a composting co-op that you made a personal investment in, but what other kinds of things, resources should people look for in their communities to kind of get more involved in direct lending, which I think was so transformative for your journey, if I understand it?
Yeah. Well, this part's hard. This part's hard to go down this path. Eventually, I am now sort of running my own little tiny private equity firm. And I don't know that that's a good idea. Like I'm making these investments, we're signing private placement memos, and it's been a lot of work. I happen to know the Rust Belt guys through the co-op work, so that helps. My sister, of course, got this, but it's not easy to find these sort of deals and to vet them and do it responsibly. So I just want to be clear. That's why I'm really excited about what Mika's doing, like help us take this to scale and take this pressure off of individual folks. I also got to say this, Felipe, this idea that we should be able to commodify these relationships is kind of a premise of this question of how to use our financial resources. And just at a big picture, though there are some really good small businesses to support, and I'm continuing to try to find those. There was a recent, like a plumbing co-op that a different friend made a loan to. So we're kind of expanding this practice of finding one-off offerings. At the big picture, I'm not sure we can commodify our way out of the crisis that we're in, both with the climate and our political economy. And so while I put some energy into that, 80% of my energy is actually in building collective solutions that try to move beyond that. Though the tools of capitalism still have a role to play. So life's full of contradictions.
That's actually a great segue, I think, to Ichen and Quechua. This was cooperative. So Ichen, take it away with a little bit about Quechua and some of the other pieces you want to share with us.
Absolutely. Thank you, Felipe. And also thank you so much, Jonathan, for so many excellent nuggets and framings that I want to jump on. I'll start with, I love the kind of truth and where your story is coming from, because I think for all of us on the panel, in the audience, etc., a lot of where we are today with our capital journeys starts with like a feeling discomfort, our own stories, and us just trying to wrestle with like, what are our values? How do we live into in the world, right? And I was actually not really planning on going too much into my own story, but I have a presentation. I'm the one square that has, a presentation that I'm going to walk you all through. But I will say, taking a couple steps back, for me, I started my career in venture capital, pretty traditional venture capital at a corporate firm. Went to work in investment banking at Goldman Sachs, and then left to start my own private equity firm with some colleagues of mine from Goldman and who worked in private equity too. And we were a self-proclaimed market rate impact investing firm. So I won't go into the details of what that actually means, but I was at a time in my life where I believed in a theory of change that married my own, professional background of finance, investing, corporate governance, all of that, plus this like idea that I had that there was maybe a way for me to this idea of this experiment of, can we invest our way out of social problems, was something that I was really wrestling with. And I think at the time that I left my firm, I felt like I had abandoned the hope in that. But like, to what Jonathan just ended his portion on around life is full of contradictions, I think that we'll never get out of our social problems, in my lived experience, through being a purist and thinking about, only this works, right? We live in a world full of contradictions. So all we're trying to do is struggle in our own stories towards something that feels like a better version of like a past theory of change that I think I've abandoned. So I'll also say, when I left private equity in the form of my old firm, I was really out there in the world seeking models that I felt like aligned the incoming capital, so our investors' capital, with what we were trying to do and see in the world longer term. So that might mean that if an investor in my old firm gave me $1, I was somewhat obligated based off of the marketing materials that I, said to him and sort of like a promise to them that I would give them $3 back over the course of 7 to 10 years. That's like sort of the general transaction that we participate in, right? If you're going to invest in my fund. And so I thought, and from my own experience working, at times companies need more than 7 to 10 years to truly grow into a long-term sustainable community asset, which is what I would hope they would ultimately do, is to be something that you could, you buy something from. If I buy something from REI like 10, 15 years ago, I would expect that that return policy ideally lives into 30, 40, 50 years, right? And these are all of the institutions that I would like to see in the world. Hospitals that don't go bankrupt within 5, 10 years, 15 years, 20 years, but things that are long-standing, they have great relationships with the community and all of that. But I was not finding the right capital structure from a fund perspective that really allowed these long-term relationships, long-term institutions to truly grow. And I was sitting in the fund manager's seat. So it was like a contradiction that I could not figure out like where to begin. And then I met somebody who, very similar to Jonathan, your story of, you're creating your own private equity firm, sort of your own investments, right? Who from his personal portfolio ended up creating an investment cooperative. So I'm gonna actually just now share my screen and go through some sort of nerdy context around what Kachwa is, because it is kind of important in the context of not just the story, but how do we actually create a model like this that is in the world and we're not being both harassed and sued by people, by the SEC in particular too. So what I'm going to start with is just a couple of, sorry, this is, yeah, you cannot teach an old dog new tricks, right? So my ultimate goal is to share a little bit about what an investment cooperative is, and then use Kashua as an example for you all to just know that we're one of many out in the world. And by the way, you can start your own, which would be even better if everyone here started their own. I will share about some investment cooperatives that I'm not a part of, so I'm not representing any of them. It's all information that is publicly available. And at the same time, because my firm is actually technically still in an offering window right now, nothing I'm sharing is a solicitation for you to invest in the firm, and it's also not financial advice. Okay, so that out the door. Want to share as much in terms of resources, as well as we're here to talk a little bit about, private market investments outside of Wall Street. Just a little bit of a 101. And I have a tendency to talk pretty quickly, but I hope that in this context that you can still follow along. What is a security, right? We see, and again, finance is riddled with terms that make it scary, intimidating for, I would say, like the average person. I myself was in this. My parents don't even today. I have to describe a lot of things like into very simple terms. It's just an obscure smoke and mirrors industry when it doesn't really need to be. It's an asset. It's sort of like a widget that is tradable on a market, right? And the SEC in the United States is sort of the governing body that makes it such that it's not the wild, wild west. Like I can't just, openly sell you shares in Yichen Feng LLC or Yichen Feng Co. and then just take your money, right? It's regulated, which is a good thing. But the regulation also has its own limitations too, I would say, in the rules of our retirement accounts, et cetera, right? So what are some primary ways to invest and the difference between private and public investing? So Mika shared a bit about the 401ks and just like our general stock market. It's pretty much possible for basically anyone to buy a share of a company that's available on the secondary market, which is our public stock exchange. Companies can also have public offerings when they go what we call an initial public offering, so an IPO. And then there are private offerings, right? These are private companies. It's not tradable in a public way, but they are, as we are as an investment cooperative, governed by how we can solicit to the public. And that a lot of those regulations came about because there were sort of negative actors in the market just selling things like snake oil, and then people were basically giving away their hard-earned money, right? And then you have direct purchases of other assets like real estate, collectibles, bank CDs, all of that. And so Basically, anyone can buy securities on a public stock exchange, as you all know. Private offerings is what I'm going to talk a little bit more about because this is more relevant in the context of Kachua. Our laws mandate that typically, and again, this is typically, there's so many edge cases, but I'll just say, like, generally speaking, only if you are designated as an accredited investor or even a sophisticated investor are you able to participate in private offerings typically. And private offerings, I would say this could be in a private investment fund, right, that invests in private companies. And then I'm sure you've also seen crowdfunding as a sort of a vehicle for accredited, unaccredited, and basically non-sophisticated investors within certain limitations around how you solicit. And in certain states, it's also very different too, where you can go on a WeFunder and basically, contribute some capital to maybe a local brewery's capital raise, et cetera, right? So these are all kind of the different ways in which you might be able to access some of these assets. What is an accredited investor? Felipe touched about this a little bit too. Super simple to just Google, but there's basically a net worth threshold, right, of either $1 million or some annual income threshold, or maybe you're an entity with assets greater than 5 million. So at Catchwa, sometimes we're also technically an accredited investor in certain cases because of our own asset under management and how much we have. And so these are some rules to basically protect people from quote unquote risky private investments. There's also a different definition for a sophisticated investor. It kind of shows how gray a lot of this stuff actually is. You don't have to be accredited, but basically you possess sufficient knowledge and experience in financial and business matters to understand and evaluate the merits and risks of investment. This is really important to us at Kachua because we can take accredited and unaccredited investors, but for us to sort of pass a certain barrier of our as like fiduciaries and responsible sort of fund managers ourselves, we typically like to make sure that all of our incoming members, we can understand whether they are sophisticated investors, accredited investors, or unaccredited investors. And this is important because of our designation and sort of the gray area that we sit in. The SEC also looks at things like investment clubs, right? And this is a lot more relevant for groups of people who are, potentially not accredited investors, not sophisticated investors, but they may pool their money together to invest, and they generally study investments and then make investments together. So if you've read the Joylet Club, the parents like to get together, talk about stocks, and then like decide with their pooled funds how to invest. We sort of operate a bit as a hybrid of an investment club because our members are active in that we're also a cooperative. So as a cooperative, every single member within Kashua has one vote, right? And so that's sort of the active part of the investment in that what do you vote for? You vote for the board, which essentially acts as the investment committee that then chooses and selects the investments that make up our portfolio within the certain parameters and boundaries of what we care about. So before I get into that, cooperatives are a really interesting piece of our puzzle because we are members and an investment cooperative that cares about democratic governance, right? And because we kind of attract other people who also care about democratic governance, we typically draw others who share the same values. And that includes not just being profit driven. And then you can sort of geek out on the 7 cooperative principles later on, but just something to kind of take a look at. What's important from an IRS perspective is that because we're an investment cooperative, we can also pay patronage dividends that are tax advantaged because of a specific subchapter in the IRS like revenue code. So it's nerdy, but I do have to say that like in order for us to do what we do, we have to be IRS compliant for many reasons. And we are an edge case in the overall world of funds in that a lot of our things actually do need legal opinions because it's a bit unprecedented what we do. And then I'm just going to go a little bit more. There's many different types of cooperatives. I won't go into it, but investment cooperatives are one type. And we're in here, but Jonathan was mentioning kind of a potentially like a real estate housing cooperative, right? There are many of them that are also investment co-ops. It's just sort of pooling capital to buy another type of asset, which is a real estate asset. This is one example. I won't go into detail, but I personally am a member. I live in Oakland, California, of the East Bay Permanent Real Estate Cooperative. I was really attracted at the we're a rapidly gentrifying, potentially like post-gentrification neighborhood in the Bay Area where real estate for the average person is really, really difficult to buy into. And so us as residents in the East Bay that are part of this co-op have pooled money together, and the cooperative uses this money to then go and buy, housing complexes that they then turn to, over the long term, tenant owned and operated buildings, which is phenomenal. And so there's another example of a cooperative. And so I'm going to go a little bit more into detail about Kochua now. So we are both an investment cooperative and a public benefit company. So we are a company. We're not a nonprofit. Some of these other co-ops are actually nonprofits. It was founded in 2005. There's a gentleman by the name of Blake Jones, who's a cooperative geek, and he ran a solar installation company. Similar to Jonathan's story, started to kind of think a little bit about sort of his own private market investments and created a personal portfolio that then other people were super excited by. And they were like, well, Blake, I don't want to be diligencing companies, but like, can I just buy into, the portfolio that you've already created, right? So if you're going to give this company $1, let me give you another $1 and you give them $2, is essentially how it started. And then we converted into a cooperative, taking members in, all of that, formally in 2019. But we've been doing this work for many, many years. And so what we typically invest in, we're not a single issue or a single sector co-op or investment club. We own and operate impact real estate, and I'll go into detail around what that is. And that's 60% of our portfolio. And then the other 40%, that basis allows for us to basically invest. Am I over time? Is that what the hand raise is for? It is, right? Okay. Allows for us, the last thing I'll say is that allows for us to basically invest in all sorts of private market investments. And it gives us this freedom because we are a REIT, not a technical fund, and we operate more like a mutual fund too. So I guess like what's more important here is that we take new members every year. It's a super low minimum, $5,000, right? And every member, regardless of if you put in $1 million, $5 million, we all get one vote. And then we have a very, very active investment committee that basically goes out and sources and are growing the portfolio of real estate and then private. And now I don't even get a chance to talk about how awesome the real estate stuff is, but yes, I'll pause there.
Thank you so much, Yichen. I mean, as you can see, there's just such a wealth of wisdom and experience. And I think what Yichen was just about to say was how interesting this fund is because it's actually majority real estate in addition to kind of the impact funds. Sister Catherine, did you have a question to jump in?
No,
Okay.
but one thing that I would ask is how can people find out about these different types of opportunities? Is there a particular place they can go to learn more? There's so much being covered. It's really exciting and engaging. And I'm just wondering to any of the panelists, are there certain places that you went to educate yourself or to learn more about these types of opportunities?
Jonathan, I'll push it to you.
Yeah, I mentioned Michael Schumann. I mentioned Next Egg. Felipe has been on this journey together. I know that Hendrix has a lot to offer. Cordata Capital is like a related kind of advisor. Online, it can get you pretty much where you need to go. And relationships and community are key along the way. So I'm excited to hear what Hendrix has to say because that's kind of her wheelhouse.
Yeah, so I met Hendrix when I was actually on the board of Start Co-op, and we were looking for what kind of investment advisors appreciate cooperatives. And Hendrix was one of those pioneers in Boston that had done just tremendous work with the Boston Ujima Project and other cooperative type entities. And now she's part of a phenomenal kind of cooperative conglomerate. So how do we have cooperatives get to scale? We've always heard of Mondragon in Spain with tens of thousands of workers and billions in assets and revenues. One of the great lights of our Catholic tradition. But Hendrix, over to you to kind of share your journey and where you're at today.
Sure. So thank you guys. This is wonderful. And it's great to go last because I had a lot of things that I was going to mention that you already touched on. So my journey into finance comes through solidarity economy organizing. I have now landed at a firm that I started with a few other folks under Oberon Cooperative, the conglomerate. And we are now a group of people a group of advisors who see our role as one that is primarily here to serve social movements. So I want to talk a little bit about financial planning as a tool to help folks identify, maybe folks in Jonathan's situation, folks with assets with either inherited or from work, wealth and privilege that they are trying to figure out what to do with. So one thing to note is that we look at financial planning as a set of tools within a broader ecosystem of investor and donor organizing. Jonathan brought up resource generation. I think the Francesco Collaborative could qualify in that and investor organizing space. And so there's all these collectives that are mobilizing and politicizing investors, and really helping folks interrogate and dive deep into some, really personal, emotional issues and relationships with money and wealth, and trying to identify what they want to do to address that class privilege, what they want to do with those assets. Folks come to Oberon Capital Advisors, which, as Felipe mentioned, we're part of Oberon Cooperative, which is a worker co-op conglomerate. The cooperative Oberon is a worker cooperative that owns a number of different companies, including Oberon Capital Advisors. And the co-op is actually a worker co-op conversion strategy where we acquire businesses. This is the broader co-op, and I'll go into Oberon Capital Advisors, but we acquire businesses that are conventionally owned and convert them into worker ownership through acquisition. So it's a scale model, as Felipe mentioned. So we are one of the businesses. So I am an employee. I work for Oberon Capital Advisors, which is owned by Oberon Cooperative, and I'm a worker owner in Oberon Cooperative. So folks come to Oberon Capital Advisors looking for financial planning support and asset management support. We often have folks coming in through these donor organizing and investor organizing spaces. Either they've done the soul searching and they have found what their enough number is, and have found a number or an action or a project or many of those things that they would like to move forward with, but want to make sure that their personal finances and their financial plan can align with that commitment, and that they can be okay. So that's kind of the how much is enough planning that we do for folks to figure out okay, is that, say, number that folks committed to, I want to give away this amount of money, I want to give away that amount of money, or I want to divest entirely from Wall Street. We use some traditional financial planning tools to model that out and say, could you do that and meet all your other goals? And obviously there's a band of risk tolerance involved there. So it's not like we have one answer, we have a range of answers. But then we also have folks coming to us who have made the commitment, who've found the number in their heart, have made the commitment, and they're coming to us and saying, listen, I'm going to give away all of my inherited wealth, and I need you to help me figure out how to be okay, around that commitment. So that's part of how we fit into the ecosystem on the financial planning side. And then on the investment side, it's implementing their movement alignment vision, which is both on the public market side and investing in private investment alternatives, a lot of which are in solidarity economy spaces. So yeah, one of the concepts, I think, we're using a combination of traditional and more transformative tools to do financial planning. The traditional tools are really useful around math and scenario planning, so like normal financial planning tools appropriated for radical purposes. And then also there's a concept that I wanted to share with this group of folks that's being clarified and digested around in radical planning and money coaching circles, that I'll share a link, but that a money coach that we work closely with named Iris Brilliant calls the vicious cycle of wealth accumulation. And it's acknowledging the idea that so a lot of people come to financial planning with wanting to map out a plan for personal stability and security. But what often happens is that the 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 precarity that capitalism needs and encourages us to feel acutely encourages and moves us towards this accumulation mentality and this idea that we need to accumulate endless amounts of wealth for our own personal safety. But when we rely on money rather than connection and relationships and community to meet our needs and create meaning in our lives, that isolation then creates greater reliance on money to feel okay and be okay. So there's this vicious cycle, this like reinforcing pattern of using money to find safety and well-being. So we partner with this broader ecosystem and also incorporate into our non-projections work. What are the ways, what does stability and security mean for you? What does well-being mean for you? And to help folks identify more solidarity economy planning investments that are maybe not financial, but like investing in yourself, investing in your spiritual well-being. Like, is that going to help you be okay? Investing in relationships with neighbors, investing in close relationships. So we feel that's a key part of financial planning that is non-financial, and really moving and helping clients step into the solidarity economy world that they are hoping to build with the assets that they redistribute and reinvest. So there's I could keep going on financial planning for a while. Like, a lot of it is also helping folks legitimize the decisions that they have made in their heart around resourcing social movements. Working with a certified financial planning professional to do the math, to create the reports, to create the agreements that their family advisors can recognize and their family members can recognize as legitimate. And so kind of, framing these choices to walk, like, because these folks who are choosing to walk out on capitalism, framing that in a way that that is valid in the eyes of folks who are still married to more traditional narratives about security and well-being.
Wow, Hendrix, I think kind of what you were just sharing there to me just brings alive so much of Pope Francis's encyclical, which is about kind of the spiritual renewal needed for some of these hard conversations and what is enough. And I think this journey, especially pointing out to Iris here, we just got a couple questions in the chat that I want to pull in. From Joseph, asked this question: are there initiatives geared towards newer mass affluent investors? And can you explain how, if this is possibly to be incorporated in donor advised funds? So maybe I'll toss that first to you, Hendrix. I guess, is this just for the super ultra net worth high wealthy, or is this kind of for everyone that is accumulating some amount of assets and savings?
Let me just piggyback there, Hendrix. Sorry. I actually want everybody to talk to that question. Maybe Hendrix first, and just kind of generalize it. So all this stuff you've talked about, and it's complicated, right? I mean, we've thrown like 45 websites too at people. in the chat. So by the way, we'll save the chat and save some of the resources for everybody, so you don't need to open all the links. But are all these initiatives, for ultra high net worth investors, or is what you're trying to do, and I know the answer to some extent, but I want you to speak to it, is what you're trying to do open toward, more common people? So Hendricks, start with you first, but maybe everybody could speak to that a little bit.
So it's not just for ultra high net worth investors and wealth holders. Resource generation does have like a categorization or a kind of definition of like what it means, how they define wealth and class privilege. And I don't know it off the top of my head, but it's a lot lower than you think. But even so, I am part of a group called Radical Planners, and it's a community of anti-capitalist, abolitionist financial advisors, and we are work across the entire spectrum of folks in terms of their financial situation. So we have advisors in the network who work with folks with a negative balance sheet, who are trying to figure out how to align their money with their values while paying off debt. And then, at my firm, we do hourly engagements for folks that we don't do asset management for, and that's accessible. We'll work with anybody, but like probably if to make it worth it for you, our focus is on folks who have some investable assets. And then, all the way upwards to the family offices. We incubated a firm, a kind of a quarterback coordinating firm called Chosen Family Office that we spun out this year. That is a place for ultra high net worth folks to go and get a variety of services of money coaches and advisors and estate planning all in one place. So yeah, it runs the gamut.
Maybe Jonathan, I'm curious your perspective on some of this question.
Yeah, I had, basically zero net worth at like 28, net financial worth at the age of 28, and then by like 33, maybe like $200,000. And so that was when I was like really started to engage with it. And so those are just some round numbers to like give you a sense of when I was like, okay, this feels like I need to really pay attention to it and figure it out. I'm often speaking with folks, telling folks my story, and they don't have the same amount of net worth. And I'm often like, well, maybe you don't want to do as much as I did, because it's a lot of work. And so like, when is the juice worth the squeeze? But I think there are absolutely steps for everyone to take all along the wealth spectrum. And Mika, I think you just put something in the chat that's really relevant. So maybe I could pass to you to share more about that, because I'd love to learn more.
Yeah, I think our sort of guiding, goal at Just Futures is how can we make it easier for wherever you sort of stand along that spectrum, whether you have $10 you want to invest or 100 million, how do we make it easier for you to invest that money in a way that's going to be more aligned? Because again, there have been, in addition to the sort of structural barriers that we've been talking about, this piece, right, of like doing the research, going through the links, trying to understand what's possible for you and what makes sense, right? To the extent that we can sort of reduce that part of it as well, that's our goal. And so what Jonathan was referring to is I just threw in the chat as well. I probably should have mentioned this, but we did start offering individual investing accounts in addition to our workplace plans. And so if folks want to open an IRA with us or a sort of general taxable investing account, Jonathan actually mentioned Betterment earlier. We partner with them. So it's their sort of very user-friendly platform, but it's our investment portfolios that are on that platform. That is sort of part of our continued mission to make it easier at, very low dollar amounts to invest in a way that's more aligned. With the caveat, again, that the stage that we're at right now, this is still like screen public market investments. This is not the like really rad community investments that we're trying to move towards.
I would just chime in for Kachwa that as a fund, we have a pretty low minimum threshold to get access to private market investments. And so much, a lot of that was by design because many funds have a minimum of anywhere from 250 to $1 million. And for us to become a member in the cooperative, the minimum investment amount is $5,000, which is much lower. But the whole idea is to pull capital and then, we can together invest in some private investment opportunity that requires like a much higher minimum. I would say though, and I think that's been really attractive for us and why I think in a lot of impact investing panels, people will say and talk about Kachwa because we have such a low minimum threshold. It is very, very accessible. Um, and it's just by design. But personally, I've always really struggled with this because I grew up very poor. So the idea of like trading, and I think it's a false trade-off. Like this is kind of how I wrestle towards it, but of kind of giving up return for impact has always been really challenging for me in my own personal portfolio. Like the first time I ever had like maybe like a surplus, like I saved more than I like used in a given year because of my salary. I just really didn't know what to do with it because in the way that I grew up and I thought a lot of it was just sort of like not hoarding wealth, but just hoarding savings for like some catastrophe that would happen, right? So I think more of my own learning had to do with how I felt about what was enough.
Well said. I'll go back to Jonathan's initial point about the feelings part. I think it's so important for me, my own money story, to get in touch with the feelings at various points in my journey, and then with my spouse, and how different money stories, where we come from, and the inherited beliefs about what we feel and what we need from our money. And for me, it was really important. I felt like participation in the structures of sin and violence in the world through my investments as I got my account statements and realized what my underlying holdings were. And so it felt really important to me to figure out how we can change and divest from that. So many people are on that journey to divest from public markets to be able to find the ones that more fully embody the depth of our faith. So I think that's each person's conviction, but I think there are groups, and we're trying to increasingly resource groups and parishes throughout the country. One of our missions at Francesco Collaborative is to help live solidarity, live subsidiarity, live option for the poor in collaboration with others that are wrestling with in this thing. So I put in the chat earlier a contemplative personal finance cohort inspired by our Franciscan personal finance cohort, just trying to provide some companionship over 6 to 8 weeks. There's so many resources here. There's so many examples of organizations that are supporting people. We're just trying to provide one more. Jonathan mentioned Sabbath Economics. Ched Myers has a great book by that same title that I think offers some theological depth. And I think the spiritual renewal part is so core to this. So like, how does this help us connect to that enoughness and letting go?
I want to pick up one thread in the Q&A, and Yichen, maybe I could throw this back to you initially. So somebody mentioned TIAA. Let's say you have your money in TIAA. So Yichen, I believe your mom was a school teacher.
No, but she works at a hospital. Close enough.
All right. I thought it was school teacher. Sorry. Okay. So let's say your money's in TIAA or some similar investment platform. And you're concerned about greenwashing. You're concerned about really participating in an extractive economy without regard to where your money's coming from. How do you transition from a platform like that to what all of you are talking about? And we have a few more minutes, so maybe people can talk to that question.
Yeah, I'm gonna kick it off and tee it up, but then I might transition it to a Felipe or a Jonathan because we have members actually who do something with their IRA accounts. Like, so for example, my mom is a school teacher who, for her, she's an average person who most of her investable wealth is only in her retirement savings, right? She doesn't really have a ton of like leftover, like $1 million every year to be like, what am I going to do with this money? But what is already being kind of every month sort of put into an account is her IRA. So we have members who are also in a similar situation where they may not have a ton of like personal wealth just on the side, but they want to move their IRA accounts. And what they end up kind of doing is they can do everything from And if they're not already part of Just Futures, right, which like where they have like options, they can go through several hurdles and hoops to create what you might call a self-directed IRA. And there is an organization called Deep Community Capital that's trying to make this more accessible today. But I know many, many people are on their own journeys where they will go and basically agitate and try to get their like corporate retirement savings accounts to then either allow for them to do a self-directed IRA, which means like I want to actually choose where I'm putting my money. And maybe Felipe, because I know you've been on this journey, I'll just pass it over to you to share a little bit about that.
I'll pass it to Hendrix first, and then I'll jump in.
Oh, great. Okay. Yeah.
Yeah, I appreciate the topic of self-directed IRAs being brought up. It's a commitment. I just want to say that. And there's a community of folks often, circling around the next egg community that Jonathan mentioned. So there are people who can support if you want to be DIY and go the self-directed IRA route. And basically, these are custodians that are willing to hold private assets. It's much easier to do private impact investing with direct taxable assets. But if you're going to invest through an IRA, you need a custodian who will hold the assets in that tax structure. But also, this seems like a good moment to introduce or lift up. I think a few of us have mentioned social movement investing, and one of the frameworks that is like that summarizes the tactics that can be used in alignment with social movements is divest, contest, and invest. And so this is something that's been percolating over the years, and there's a lot of energy around it right now. So there's the invest maybe your private market investments, your solidarity economy investments, the things you're doing to really to invest in the world that you would like to live in and like to see. But there's also tactics that we can use in public markets like divest and contest. And so also I want to lift up what Mika was sharing about public market strategies and pooling our assets to use divest and contest levers. There we go. There's a snippet from the social movement alignment paper that came out from Center for Economic Democracy a few years ago. But so one of you could choose to, if you're no longer working for that employer, you can roll over your TIA retirement funds into a self-directed IRA to do private impact investing. It's a pain in the butt and probably pretty expensive, but you can do it. Or you can roll that money over into an IRA and have that money managed by an advisor. You could manage it yourself, or you could move it and have it. Yeah, I guess, well, Just Futures is an advisor. So yeah, many different types of advisors who could manage that. Or like Jonathan, you could figure it out yourself.
Finding a values-aligned advisor can be a challenge. This is one tool I just put in the chat. Valuesadvisor.com has one version of how to support advisors, but Hendrix can be a resource. As she mentioned earlier, she's connected to Radical Planners. And there's many that whole community of folks studies this thing called the Just Transition document, about how environmental movements, how do we transition to a different kind of low carbon, sustainable, and just future. And so I'm going to pass it to Mika and then Bernard.
Great. Yeah. I just wanted to add, while you're still at whatever employer you're working at, if you don't like the retirement provider that they're using, I think there can often be a lot of concern about the level of work involved in changing providers. And not to say that there are never roadblocks or hiccups that sort of complicate the process, but a lot of times employers stay with the same retirement provider for decades. And what we've found, bringing new clients on, is that oftentimes these larger incumbent providers are also charging really high fees, high fund fees, and that where our clients might have expected to pay more for a values aligned solution, in some cases they actually save significant money, particularly for their actual participants, right? Because a lot of fees end up getting passed along to staff. So moving providers, encouraging your employer to consider that can be as simple as, like 5 to 10 hours of work over the course of a few months. It doesn't have to be this huge overwhelming process. And, of course, if Just Futures is an option that you would be interested in considering, we're happy to have that conversation.
Well, I'm going to thank our panelists, and I'll turn it over to Dr. Feely for a couple words, or Bernard to close us out.
Thanks so much, Felipe. One of the things that strikes me as we come to a close this evening is to think about the starting point of what's your own emotional connection to the investments and what you have accumulated through your labor. I mean, there's tremendous respect for the human dignity and the work that we do as part of our call on this planet. And to ask these questions about community, connection, values, and the moral compass that drives where we go from here. I was really astonished by the intersection and the connection of insights to help us really think more critically and about connection and disconnection, about isolation and community. And I think it was Hendricks, and this comment showed up from Bob Stewart in the chat about, is it a vicious cycle that individual isolation leads to greater money reliance, which leads to greater isolation, which leads to greater money reliance? And how do we build a solidarity economy, as so many of you are suggesting, by the ways we work together as opposed to how we live apart and accumulate for only ourselves? I just thought it was a really interesting conversation, and those are some of the threads that I wove together in terms of how do we really think about the moral compass that drives the way we use the resources that are part of the work of our hands.
I think on that note, we should say goodnight. So thank you to all our panelists. Thank you to Felipe for moderating. Fantastic conversation. Thanks to everybody for hanging in there with us. I've saved the chat, or at least I pushed save chat on Zoom. I sure hope I'm able to save it. And we'll send along, maybe not all the links, but some of the links, since there's a lot for people to study up. So thank you, everybody. Have a good night.